Welcome to another episode of the Virginia Investor Podcast. Today's guest is an insurance professional, someone who is a good friend of mine who I've known for years now and work with closely and have many clients that work with him. Chris Hall, I'm excited to dig into your story, the world that you know of insurance and all of your knowledge and experience and some cool and crazy stories that come with that. I know that you do insurance across a lot of different things like auto insurance and things like that. We really want to focus on insurance, property insurance as it relates to real estate investing. Sure. Chris Hall, welcome to the podcast.
Thank you very much, Stephen.
Man, I'm fired up. I'm fired up. You have always been such a strong resource for me. When I first got into real estate, we met each other shortly after as I was trying to develop connections. And then it just turns out that I was very lucky to be in the same room with you because there were tons of other investors that worked with you and you were super knowledgeable, have a great mindset, have a great way of explaining how insurance works. And you know how to kind of deliver things in a way that we can understand and that could help us do better. And since then, over the years, we found that a number of our clients work with you. We've been able to refer a number of clients to you that have been very happy with your services. And it'll be really cool to dive in, learn more about you, and learn more about what you can share with us regarding insurance for investment property.
Absolutely.
Let's get started with how you grew up, man. I want to learn a little bit more about your childhood. Where'd you grow up? What was childhood like for you?
So I grew up actually on the north side.
Okay.
Over in Chamberlain Farms. And I mean, really just a great childhood. I have a brother and, loved the area, played baseball, soccer. Dad was a coach, just an all-American family. So really good.
Did you enjoy school? Did you do well in school?
I did well in school, probably until, like a lot of people, you get into high school and you get the whether it's girls or whatever, right, friends, you get distracted. But overall, really good in school. Actually went to college for 2 years. I was actually going into IT.
Okay.
And then worked for actually the state of Virginia down at DMV as a computer programmer for 13 years.
Interesting.
Before I got into insurance.
What college did you go to?
I did not go to college.
J.
Sarge.
Oh, J. Sarge. Okay, so you got
community.
Got it. Okay, cool.
2 years. Mm-hmm.
Awesome. And then you went to work for the DMV. That sounds thrilling. How was that experience?
Yeah, that's thrilling. No, it was good because, we basically, I would work graveyard shift. So we could touch things at night that needed to be up during the day. So we were doing things behind the scenes that when in the morning opened up, things were ready and ready to go. So it was a good experience. I enjoyed it.
Now, we might talk about this a little bit later, but you like to fish for
a lot.
Yeah,
a lot.
You're pretty much a fanatic, and you do tournaments and everything like that. When did you get into that?
So I was into it when I was 16, 17, 18, and I am a very, very competitive person in nature. So no matter what, if you say, hey, we're gonna flip a coin for whatever, I want to beat you. I'm competitive. So and then, of course, family life comes in and money's an issue with you got 2 kids, you're married, I'm working for the state, you're not making a ton of money. So as you transitioned into insurance, and I bought my first bass boat probably, I want to say about 2012, 13, somewhere in that range, just a small bass boat. And I would get into these little local tournaments. And then as you progressed and the more competitive I got, you kind of hone that in and you're like, okay, well, I can play with these big boys, or I can do this, or I can do that. So then I bought a loaded bass boat probably in 2020, 21, and then got in with some groups and great people. Like the fishing community is so supportive and such great people. And then it was, okay, well, we're going to travel to North Carolina. We're going to travel to Maryland. We're going to travel to wherever in these fishing tournaments. And as they progressed, it was like, hey, I'm going to get in this tournament and it's $250 to get in or whatever. And now it's, hey, I'm getting in this tournament, it's $3,000 to get in. Right? Yeah. It's, you're talking $3,000 and I might do, 10, 12 of them. So,
wow.
Yeah. A lot of fun.
That's incredible. Yeah, and you love it, though. So that's awesome that you've been able to build your business up as large as it is and serve these many clients to be able to do things like that.
And as we were talking, like when you get to the amount of clients and the phone calls we get, so we get probably 50 phone calls a day.
Wow.
So when you do that over and over and over, day after day, you need an outlet. Right. And for me, fishing is that outlet. For some people, some other agents, it's golf. Some other agents, it's different things. For me, it's the peaceful of I can put my boat in probably 5 minutes from where I live and be on the water, and it's quiet.
Yeah.
And I'm just fishing, and the phone's in the truck. And I'm not, I'm just
because you have a team. The team is still answering the calls. But
I'm saying even after, on weekends or after 5. Yeah. I am a workaholic. Right. So I'm sitting in my chair, not to say other agents don't, but I sit in my chair from 7:30 to 5 o'clock.
Right.
Because I'm a caring and giving person. And what's more annoying than you needing me and you calling and getting my voicemail. And when I see Stephen Glover called at 8 o'clock and I was on the phone and Stephen Glover called again at 8:20, that is going to be my very next call as soon as I can get to it. So you know how it goes.
Yeah, and I think that's why you've done so well is your responsiveness. I mean, I'm a big believer that if companies just focused on communication and responsiveness, they would be successful. If they had just a slight idea of what they were doing in their industry and they were communicative and responsive, they would do very well. And especially in your business, like people need answers and they need it quick or they need help quick, and you're right on the ball with that, which is awesome.
And I think like it's part of who I am. I don't ever want to let somebody down. Ever. I never want to let somebody down. So if it's a situation where, you called me at 9 o'clock and I didn't call you back till 3, I'm embarrassed. Because this is not only my client, this is my friend. And for whatever reason, he didn't get a call back. It's just not going to happen. Like I'm not going to physically let that happen.
Yeah, that's great. For me, I think responsiveness is more of an OCD thing. I don't know if that's the right term, but if the ball is in my court, it weighs me down and it stresses me out, and I need the ball to be in someone else's court. So if someone's waiting on me, I'm getting that ball back in their court as fast as possible.
Immediately. When somebody calls me and says, hey, I need a quote, and maybe I shouldn't feel this way, but within 10 minutes, I'm like, I'm going to ship it back to you. And now, just like you said, it's back in your court now. I'm waiting on you. And then I'm working on the next one or the next one. And then when you say I'm ready to jump for you and answer any questions you have and go forward like that.
I remember a couple of years ago, I sent you a referral for, I think it was like 100 properties. It was a $20-something million portfolio. And you're like, I'm so sorry, man. It's going to take me like 2 days to get back to you. I was like, bro, like this is a lot. Like this, and they're all like just historic, like old buildings.
And thanks to you, I still have that client today.
Awesome.
So
good.
Thank you.
You took care of them. So getting into insurance, you were working with the DMV. What was the reason for a change? Why did you want to get into insurance?
I think it's that competitive, entrepreneurial, like I always had. Like if you work for the state, no disrespect to anybody, if that's what you want to do, I just had bigger aspirations for me, for my family. I just have that spirit of, hey, I want to do this or I want to do that, and it's going to help me over here.
Why insurance? How did you find that world?
So I had a friend that I was going to church with, and he had just started an agency, and he wanted me to basically help him. So he was like, come start it, and just do it part-time. And so I was doing it part-time, and it literally took off. Probably not to pat myself on the back, but just who I am, to help people. I want to help people, help people. So, it just took off, and friends were calling me, and family and clients were calling clients, telling them about me. Hey, this guy, return my call, and you know.
Yeah, that's the second part of like being responsive and communicating well, and then adding value.
Sure.
And that was one thing that you do just endlessly. Is I can email you or I can call you and I can just ask general questions. Hey, how does this work? What does this mean? Hey, I saw this. Does this make a difference? And you're within minutes, you're back to me and you're explaining like what it works, but you're not saying like, hey, here's an invoice.
You need
It's
to
just
do
like,
right.
hey, here's all the information that I know. Here's who you should talk to if I don't have the answer, which is just an incredible, like, I want people on my team that are a resource and that will help me.
Right.
And through that, they're going to get my business, right? They're going but you realize you can add value first. And with the right people and the right relationship, people that aren't draining of your time or anything, that are respectful of your time, it's going to be a good relationship long term.
And not shove a square peg in a round hole.
Right.
If it's not going to fit, I can tell you, it's not going to fit with me, but here's what I'll do to help you. You know, I'll call so-and-so, so-and-so, and we're going to get a policy for you. It may not be with my agency, but I'm going to review that and make sure it's what you need.
Yep.
You know, I had a gentleman just recently called me. He was like, I'm buying a house in Ohio, a rental property investment. And I was like, I'm sorry, I only write in Virginia. So I'm just a Virginia agent. But if you send me your quotes and whatever, I'll take it. He sent me, and I've spent probably an hour just going over his quotes, his stuff. And I was like, this is the policy you need right here. And here's the reasons. And then he had other questions about liability, you know, what MedPay was, what liability was, what all these coverages. And I'm helping him out, you know, that's what I'm here for.
Right.
You know, and I know if he's got properties in Virginia, which he does, and I do, that's why I'm helping you, because you're my client and I care about what you're getting in Ohio.
Right. Yeah, that's awesome. So speaking, we're going to dive into a lot of the specifics of insurance and talk about, you know, this is going to be an awesome value add podcast for anyone who has questions about insurance or needs a resource for some of these things. But first, I want to learn, what is your take on like the overall state of property insurance right now? Are we in a good place? Are we heading in a good place? Is it getting more difficult? What's your overall take on it?
So, and I have this conversation a lot. So 24 and most of 25 was what they call a hard market. So when you're in a hard market, and there's been several. So insurance comes in waves. You have hard markets, soft markets. What happens in a hard market is insurance companies put their hand up and say, we don't want a lot of business right now. We want to slow down. We want to catch up. We want to see what the market's doing. We want to see what interest rates are doing. So they kind of slow us down and say, yeah, we don't want to look at, you know, that. We don't want to look at that 100 apartment, you know, complex apartment right now. And then you have your soft markets where they come to you and say, give. We want business. We want business. 24 and 25 was probably the hardest market that I've seen in 26 years. So I've been doing this 26 years. The hardest market, they stopped everything. Literally, we would send a quote and they wouldn't even let the quotes go through. So everybody was scrambling, trying to help. We're trying to help people. And we're like, look, we're trying to explain what's happening in the market. Well, when you're trying to buy a house and close in 15 days, you don't understand what's happening on our end. So now, that being said, for property, which is what we're talking about, the market continues to be hard. There is relief on the way. Auto, as of about October 1st, has really switched over from the hard market to the soft market. So some of the companies, you know, have really started to get good rates. And you say, well, why is that? Well, they're making money now. So when they're making money, they want more, give us. And the rates are reflecting that. So we can really get a lot of good rates for current clients. So I move a lot of my clients from one company to the next to save them money over and over and over each year, which, you know, gets bothersome for some clients. They're like, oh, I don't like all this movement. And I'm like, yeah, we're talking, you know, $100 a month.
Right.
Difference.
Right.
We need to make the switch, and trust me, So in the property, they're still hesitant. Let's use that word. They're hesitant to really start trying to get business in.
Is that driven by the amount of claims?
It is. It's driven by claims, and people are like, well, we don't have a lot of hurricanes in Virginia. Like, we haven't had a big hurricane since really 2003, which was Isabel, and so, but Virginia is a hot state for hail. We're just a hot state for hail. Wind and hail is a big problem here, and individual companies see it different ways. Some companies see it as, oh, we don't want to be east of Williamsburg. Well, that's bad.
Interesting.
That's bad. We don't want to be east of Williamsburg or whatever. And then there's a few companies that are like, we're making money east of Williamsburg, so we want it.
Right.
And some companies are like, we're losing money, so we don't want it. So you got to navigate, which companies are wanting it and where to go with it.
That's interesting. So, like, even something, because I wouldn't think of Williamsburg as much more risk heavy than Richmond, but I guess, you are kind of in that, pushing over into that coastal region. So it wouldn't surprise me that investors who invest in Richmond buy something in Williamsburg and might be surprised that the insurance is different or the rates are different. Like, what sort of difference are they going to feel when they start moving towards the coastal area? You're
going to see that wind and hail deductible. So in Richmond, you might have $1,000 deductible or a $2,500 deductible. Whereas when you go to Williamsburg, you might have a company that says, or let's say Gloucester or Deltaville, Matthews, any of those areas, they might say, well, we want a $2,500 deductible and we want a $5,000 wind and hail. So in case we do have that windstorm, we're going to make sure you have some skin in the game. If you want to buy in Gloucester or Williamsburg or wherever, we want to see that you've got some skin in the game. So we're going to take that wind and hail deductible up, so it kind of protects them a little bit. Right. And usually the premium's going to be a little bit less if you've got a higher wind and hail or regular deductible. Right.
So what do you think about deductibles in general? What's your take on low deductibles?
So here's my take. And it's tough because it's individuals. But one thing across the board that I can tell people, if you have $1,000 deductible, okay, and you're paying a premium based on that $1,000 deductible, think about this. You have a $1,700 claim, okay, and you say, Chris, I got a $1,700 claim and I really want to turn it in. People want to use insurance because they pay for it. Mm-hmm. We understand that. $1,700 claim, you got $1,000, you're going to gain $700. Your policy is going to go up about $500 for the next 3 years. Right. So a claim sticks with you for 3 years. It's not going to come off until that 3-year mark.
Right.
So now you've got $1,000 and you've paid $500 for the next 3 years. Why not just set that deductible at $2,500 and save the money up front? And then at that point, if the claim happens, you may have that nest egg sitting there to say, yep, we were saving that money, but now we have this claim. And typically what I would stress is homeowners, rental properties, it's not a maintenance policy. You are expected to keep your house almost like it's your own. Homeowners, if it's a rental, insurance companies want to see like you're taking care of that house and protecting your asset and the tenants that are in the property. Like they're your clients.
Right.
So you want to protect them. So I suggest everybody to start with a $2,500 deductible if you have, that little bit of capital. And even if you don't, I'm probably going to say it just makes sense.
Right.
And in some cases, when big companies or you have a $100,000 multiple policy, portfolio, I will tell you some clients have taken it to $10,000. Right. And I've had a client won't mention the name, took their deductibles from $5,000 to $25,000. You say, whoa, that's crazy. They saved $20,000 a year.
Mm-hmm.
And I've had this client for probably 4 years, and they were at 5,000, went to 25, saved 20,000 a year. Just think if they had done that up front and saved that would be 60,000 they would have in their bank account.
Right.
And this client has not had a claim.
Right. Is that on a multifamily asset?
It is multiple multifamilies.
Right.
Yes.
Okay,
yes,
cool.
Yes.
I just wrote down someone I need to connect you with, by the way, because I'm like, I've had a very similar conversation in the past week or two with this person, and that might be a trick to help his insurance go down.
Sure.
That's interesting. So you're saying 2,500, is that on, would that be on multifamily and single family, or is that really geared towards single family? Do you have a suggestion for and when I say multifamily, I'm talking like sub 100 units, not like 600 unit complexes or anything like that.
Usually when you say multifamily, sometimes I think duplexes, quads, things like that. Yeah, it's the same premise because especially, I'll just sidetrack here, on a homeowners, and what people don't understand, and I say this all the time, they're like, oh, I didn't know that. In Virginia, if you have 2 claims in 3 years, you're done.
Interesting.
End of story. Like, if you call me and you've had 2 claims in the last 3 years, and let's say they were $10,000 claims, each one, I'm going to say you have 2 options. You can call the state of Virginia and get a policy through them. The caveat is those policies do not cover water damage in 90% of the cases, okay? So you don't want to do it. It's basic coverage. There's no extras. You just don't want to go there.
Right.
The other only option is to call the mortgage company and say, you find it and force place it. And then that policy becomes a policy that was $1,000 is now $4,500 with a $10,000 deductible because the bank had to find it for you.
How do you treat insurance by, I would say asset class, but let's say whether it's a short-term, long-term rental, short-term rental, long-term rental, or a flip? Like, how do you look at these differently?
So if it's a long-term rental, and it kind of goes back company. So long-term rentals, there's lots of companies that offer long-term rental insurance. So you kind of got your kind of pick of the litter. Hey, we're going to find the best coverage, best deductible, what suits you for your situation. Now, when you start to get into flips and short-term rentals, flips, there may be a handful, maybe less than 5, that want to do flips on a decent basis. And when I say that, when you do a flip, there's some companies that are what they call short rate, so you want a policy that's prorated. So if you buy a house, you want it for 3 months and you're going to sell it. Okay? Vacant flip is what we call them. You're renovating it. So at that point, I'm going to go to this company because they are prorated, meaning when you pay that premium, you're going to get anything you don't use back.
Interesting.
There are companies that say, nah, you're going to pay us 6 months and we're going to keep it all no matter when you sell it.
Yep.
So you get done early, 2 months. Now you've paid 4 months worth of premium that you're not getting back because you were not with a prorated company. Short-term rentals are even tougher. There's only probably 2 or 3 companies I know of that like them and do them well. And I have 2 of those companies. The other one I don't have, but they do a good job. And I tell people all the time, I'm like, here's my 2 options. Call this company because they also do it really well to find and ship it to me and let me look at it so I can say, yeah, pick that one. That's the one.
Are there any ways to get around that challenge? So like you just put a regular policy on the house, let's say it's a short-term rental or something, you put a regular policy on the house, but can you put umbrellas under it to where it's not like you can protect it more? And maybe it's a slightly higher risk, or maybe it's not allowed. Like, is there any way to get around that short term? Like, hey, this is a short term rental.
No, like if you're going to do a short term rental, you need to let them know this is a short term rental, because you don't want to sign an application that says, oh, I'm going to have a year lease, and you're having people go in and out of this house every weekend. And there's reasons for it. Like, the insurance company is taking more risk on 100%. A short-term rental than they are on a long-term rental.
Right.
And they're trusting on a long-term that you know this client and you vetted that client, and there's things that you're going to look for versus you've got somebody coming in every weekend. You have no idea what they're doing in that house while they're, And some of the cities, Hopewell, Richmond, are cracking down on the short-term rentals, and, so, yeah.
If you're rehabbing a long-term rental, so like the goal is for it to be a long-term rental, but it's going to be vacant the first 6 months as you completely like gut it and rehab it and things. You just get a builder's risk policy, or what? How does that work?
You can just tell the company, hey, look, I'm going to have this property and we're going to do it long-term, but I need to renovate it, carpet, paint, whatever. I need to put a new roof on it or whatever. You let them know, and they will put what they call a renovation surcharge on there. So, and it's only for the time that you don't have the tenant in the property. So once you've done the rehab and you say, hey, I've got a tenant, they remove that surcharge, and the policy's a normal policy.
What are the most common denials that you see for vacant property claims?
That you didn't tell them it was vacant.
Yeah, just you tried to get around it.
Yeah, you tried to get around it, and there's nobody in the house, there's no furniture, and you tried to do it as a regular policy, and when you do that, you're just going to get yourself in hot water.
That makes sense. You do the right thing, and you get covered.
That's right.
And you don't do the right thing, and you get caught, right? And it doesn't work, right? What about freezing pipes? So it's cold at the time of this recording. It's been very cold. I think it felt like 3 degrees last night in Richmond. Is there any extra protection that a homeowner or a long-term rental owner can get or should be looking at regarding water damage or freezing pipes or anything like that?
So on a rental, a long-term rental, even short-term rentals, they are assuming someone is in that house all the time. So that coverage for freezing pipe is included. Where people tend to get in trouble is the fix and flips during the winter, because there's nobody at that house.
Right.
And sometimes you didn't put the heat on, and all of a sudden, we couldn't work this week because it snowed all week.
Right.
And nobody's been in the house for a week, and that pipe is busted, and that water's run for days.
Right.
There's no coverage for it. Because on a vacant house, you're not going to get water damage coverage easily,
That's a good note for investors to do their part and turn off the water if it's cold and they're not going to be there, assuming the house doesn't have heat.
Yeah.
If the house has heat, drip the pipes and take some other precautions.
Yeah.
But
even for investors, think about, if I'm going to buy this house, if it's going to be vacant during February, you have to take those precautions. So think about that as an investor. Hey, I can maybe get this house in March, or it's all those things you have to think about. And there's some other things that we can get into as far as when you're thinking about flipping a house or being an investor. Things to stay away from: asbestos siding, because right now I probably have one company that will do asbestos, and they are going to, they're going to say, we don't want asbestos anymore. So when you go look at a house, Stephen Glover goes and says, okay, I want to flip this house. I don't have to put any siding on it, so I don't have to worry about that cost. You're going to have to start building that cost in for asbestos, because eventually Virginia's just going to cut it out altogether.
And do you see like the same issue with asbestos roofs and things like that, other areas, or is it mostly just the siding?
No, it's mainly the siding, but I think any asbestos, you're gonna start running into problems with it.
Yeah, I was gonna ask, what sort of pitfalls do investors, what do they miss before investing related to insurance? And that would be one of them. What other things do you see that might get investors in a bind?
Roofs are, you think, well, this roof is 25 years old, but it looks great, you know. Well, there's insurance companies that are just going to ask me up front, well, what year was this roof replaced? Well, it was 26 years ago. Oh, we're not insuring that. We don't want it.
What's the typical age? Like, what's the cutoff, or when does the concern start? I guess it depends on the asset type, the type of the roof and stuff like that.
Yeah, and the company. So some companies say, we want 15 years or newer. I have 2 companies that say, we'll go up to 20. One company, only one, will go up to 25. Now, what I'm saying when we were talking about the market kind of giving a little bit, so some of these companies are saying, okay, we said 15, but we'll work with you.
Right.
You got 18, you got 19. Talk to us. You know,
we just
and
increase the premium a bit? Like, is that
no,
or are they just
when that market softens, they're willing to bend. When the hard market is steadfast and a red line and red tape and.
So what should investors do before closing on a property like that? Like, they're obviously, they need to have insurance on the property when they close, but are they coming out and doing an inspection? Like, what, and when should that process start?
When you're looking to buy your own due diligence. When you're looking, you go to look at a house and it's got asbestos, and sometimes investors will call me and say, hey, take a look at this house. What do you think? And I'm like, well, it's got asbestos, and so do you have the capital to replace that immediately? Because they're going to give you about 30 days. The one company I have, they're going to inspect the asbestos, and if it's chipped at the bottom, they're going to say, replace those, you know. And then it becomes a problem of, who are you going to get to replace that? Because nobody wants to touch asbestos. Right. You know, nobody wants to touch it.
Do insurance companies care if you overlay vinyl or something over it? What's your thoughts on that? I love your eye roll.
I don't want to talk about that. No, it's you know, I'll just say it is done, you know, ahead of time. So if I'm looking at a picture of a house, and the insurance company sends an inspector out to look at a picture of the house, and you've got vinyl on the house, they assume it's vinyl.
That is what it is, right?
Yes, sir.
Yeah. So you mentioned, like, investors will sometimes, like, bring you information before closing. What would that checklist look like? Like, obviously roof is one of them. What are some high level items that you're going to want to see that could either make or break a deal?
I wouldn't necessarily say asbestos, obviously one. Roofs could be a problem depending on the age of the roof. Chimney, I've had some companies come back and say, your chimney is leaning, or do you see all that mortar that's missing around these, you know, around these soffits or whatever? And then a lot of times investors focus on the house, and you've got a shed or garage. And luckily, I have companies that will actually exclude the shed altogether. So you didn't want to touch the shed. You wanted the house to look pretty because you're, you know, an investor and you're not worried about the shed. Well, the insurance company, because that shed's on the property, still has to cover that shed. So they want that shed or garage looking just as good as that house.
Interesting.
So things to look for like that. You know, I would say those are the main things, and then we get into, you know, once you have the property, you know, vetting that clientele of, do they have a pit bull? You know, it's the dog bites and stuff like that, or just insurance companies take them very seriously.
We have a few clients where we have to be very specific about what breed of dog is allowed. Now, in most cases, all pets are allowed. Under insurance policies of our clients, at least what they're telling us, because we asked that question. But we do have a handful of clients that are like, hey, we cannot accept these breeds because of the insurance company won't allow it.
Right. And there's some companies that won't allow it. There are several companies that do not have a dog breed list. So if I have a client that says, I've had this pit bull for 10 years, that's more important than this insurance.
Yeah, 100%.
And I'm like, okay, well, we have to go to this company, because they don't have a dog breed list.
Yep.
And we can get you insured, no problem. Now, is that going to be a higher price? Probably, because they're taking on more risk. You know,
Yep.
it's all about risk and evaluating a property and the tenants and who's in there and who's coming and going.
Right. There was a a deal that I was helping a client with a year or two ago. So maybe this is like old news, or maybe it's not relevant anymore. But I wanted to talk to you about it because it was something that you were working on, and we had been going back and forth on this thing, and it was really interesting to me. It was I don't want to name the property specifically,
Sure.
but it was a 50-unit apartment building, and it was essentially this client was doing the underwriting and seeing if it would pencil before they put an offer on it. We were helping with analysis, and then they needed an insurance quote. So of course we passed them to you for you to be a resource and help them out. But it ended up being a historic property, and it was an apartment building, and there were like several layers of issues in that property where the insurance was either unavailable for it completely, or it was so expensive that it broke the deal. Do you probably don't, because you deal with thousands of people, but do you remember, or can you recall certain situations when historic properties really like changed the game, especially maybe in the apartment world?
It's historic properties. You're in the insurance world. If I have 22 companies that I deal with, okay, well, historic, only one company will do a historic home. And there's several reasons for it. One, you can't put it back just any old way that you want to put it back. You know, you've got law, ordinance, codes. So, which then costs the insurance company more money because they have to put it back to that code or the way it looked or whatever, and to preserve that property. So I think in the question you're asking, it's finding that company or that niche company that says, oh, we love historic properties. You know why? Because we look at the numbers and they've made us money for years and years and years, where another company may say, no, they cost us money. We don't want any historic houses.
Is it similar with like banks have buckets where they're like, we'll lend on commercial multifamily, we'll lend on single family, we'll lend on businesses, and then when one bucket gets full, there's too much risk in that bucket, and they kind of like slow down their lending. Do insurance companies operate the same, where they might have a lot of one type and they need to de-risk that and diversify a little bit?
Yeah, and so insurance companies are probably, and there's two that are amazing with numbers and risk, and they could tell you what, age of the house, zip code, who has the most claims, what that claim is, whether it's fire, this, that, and the other. And they look at that bucket and say, do we want any more risk on this? And they can see the red line of, oh, we're getting a ton of claims on these specific houses. So we're going to put a stop sign to say, we don't want any more of that. We want the rest of this stuff, but we just don't want any more of that. And then another company may say, oh, we love this stuff. Give it to us,
So we talked about historic, like the historic tax credits, et cetera, where there's all kinds of codes and regulations you got to follow. What about the age of the property? Like it's built, there's one property we managed that I think it was built in like 1886 or something. I don't know. Don't quote me on that. But it was out in a really old stretch of Church Hill. How does insurance view age of the property, year built?
Yeah, you're going to pay a higher premium for an older house. It's just that simple. And there are some companies that say, we don't want anything over 100 years old. And you say, well, all of Richmond, all of Richmond is well, there's some companies that love all of Richmond. And the reason for some of that is you got galvanized pipes, which typically insurance companies hate. So there's just, more risk involved with an older house than a newer house. Not always. Some of these new houses that get put up, track houses have issues right away. But to answer your question, the difference in premium is what you're going to see. I just had a client who was buying an 1880 house with a flat roof. Well, that's all of Richmond, right? So it knocked out about probably 18 of my companies because they won't do over 100 years or 125 years. And then there's companies that are like, we don't like flat roofs. We have a lot of claims for flat roofs. So it's just finding that particular perfect policy for that client. Are they going to pay a higher premium than a 2025 with a brand new roof that's sitting in a subdivision? Absolutely they are. there's more risk there.
There's one more question I had about short-term rentals, and you may not have had any experience with this, but have you ever worked with the VRBO or the Airbnb insurance policies that they offer, like through a claim?
No,
Okay.
I have not.
Okay.
Yeah.
What about liability? Where do you think liability is growing the most? Like, what are you seeing as far as liability claims the most in like rental properties?
Liability, as far as liability, I think the owner just needs to be conscious of, again, vetting the client, but also like even the small things of you got wires going across steps, at the bottom of the step, and as an owner, you may say, yeah, it's not really a big deal. Or I'll give you an example of something that happened, and that this might help you. So I had a rental property downtown in the city. I had a friend come over. They had steps going down into like the basement, and you have two railings. But at the top of the railings, they're going this way. He's leaning against the railing. The railing caves in. He goes down the steps. It's like a big lawsuit. I won't give the amount, but a huge lawsuit. And he won. It split his head open. And who was at fault? Well, the owner of that property didn't make sure that those railings were secure,
right.
And it's all about just the small little things that you really need to look at to not have those lawsuits. And there's some people who say, well, I'm not worried about that because the insurance is going to pay for it. Have you ever been in a lawsuit? Do you know how long and time consuming these get? On top of, you've got $600, $700 million claim on a property that follows you.
Right.
So insurance companies are going to say, oh, Stephen Glover, wait a minute, what is this $1 million liability policy? And you want me to write these 4 houses for him? Yeah, no, sir, we're not doing that.
Does that also fall off in 3 years?
It will.
Yeah. But still, that's 3 years. You're going to go through some pain.
Yeah.
Have you seen anything with like DoorDash drivers or anything like that? I've seen it on nationally, some crazy things, but have you seen any in claims that you've dealt with?
I haven't seen it, but if the owner of the home has done everything in his power to protect his property, then typically that lawsuit's not going to go anywhere. Now, if that owner is negligent on a property, whether they got cords going across the above ground and that UPS driver comes in or whatever, and I'll give you one quick scenario, and this was a dog issue. The UPS driver went to the house, deliver a package. Door was cracked. German Shepherd comes out, bites the UPS driver multiple times. He went to the hospital. So the homeowner gets sued. UPS is involved. Workers' comp's involved. All these things that could have been prevented if that dog had been either, the door had
contained,
been contained or whatever, or on a leash or, and you see it sometimes with trees, and people, I get this question a lot, like, hey, my neighbor's got trees that are leaning over my property and they're dead. And here's my suggestion to that is you send that other owner a certified letter saying, we think this tree is dead and we would like for you to take it down. All right. And you keep your on file and you send it to them. If you send it certified, they sign for it, they got it. Then if nothing's been done in 3 weeks to a month, you send another one. When you send that second letter and nothing's been done and they refuse, if something happens, what that allows is, so the tree's still going to fall on your property. You're deductible, so you got to come out of pocket for $2,500. But what that does is it allows that insurance company to go after his insurance company because he was notified and he was negligent on this dead tree. And I have situations where a tree actually fell on someone and they usually will lose that lawsuit. So,
right.
yeah.
We've had that. We actually get that a fair amount where the tenants will send us a work order and say, there's a dead tree on the property. Can you please remove it? And that's always, it's a really tricky one because we're like, that's going to cost thousands of dollars. Is it really dead? Is it just like a tree they don't want to look at?
Right.
Is it like, and so we have to analyze all this, and then we go to the landlord and let them know like the risk and this and that. And it's like, it's usually a pretty tough call to say like, is this worth removing or is it just, so yeah, it's, you know, we try to lay it up to where, you know, safety first, like, hey, this is what we suggest. We understand this is going to cost money. It does appear to be dead. It looks like it's been dead for a long time. It's not leaning, but, you know, branches could fall or stuff like that. So
back to your question of things to look for. So when you're buying that property originally and you see that tree, I factor that cost in to say, hey, look, we're going to have to take this tree down, you know, and a lot of investors, I get it. They're trying to make money, save money, and everything. But if you do your due diligence up front and you say, I got to take that tree down and that tree down, because it's a good chance they are coming down, whether it's going to hurt your tenant, somebody's child, the neighbor's child. You know, you got to be, I understand, you know, we all want to make money, but we are human beings too. So you got to care, you know. So I think it comes down to that too. Integrity.
Your story about the delivery driver getting bit by the dog, I assume that was the homeowner's dog, correct?
It was.
If that would have been a tenant and it would have been the tenant's dog, what do you think that insurance scenario would look like?
So if the first line of protection for all investors is to make sure your tenant gets renter's insurance, okay? And I suggest most renters comes with $300,000 in liability. Just put in the lease contract you want $500,000. It literally costs the tenant like $3 more. Okay, so we're talking 25 cents a month more. Just put it in the lease to say we want $500,000 in liability. And why is that important? Because that's the first line of defense. So they're going to go after the renter's policy. Now, there's no getting around the owner of that property's insurance not getting sued over a dog bite. So, but if they say, okay, well, we're suing for X amount of dollars, that renter's policy, the judge or whoever may say, yeah, we're going to give you the $500,000 in the renter's policy, but we're not going to touch the owners because they didn't know. Or now when you get into, did you know they had a pit bull? Did you know they had this? Or did you? Then all of a sudden that owner becomes liable. So,
Yeah, that's interesting. We've had actually very few scenarios like that. Fortunately, we screen our pets and things like that. But we've had this actually was an illegal pet that we didn't know was on the property. Had no idea. And then a neighbor, I think he was like 90-something years old. Dog got loose from a tenant's house it had 2 illegal dogs. And this is years ago. Bit the neighbor, he had to go to the hospital, and he's a 90-year-old guy, right? And so the tenant was able to come get the dog off the neighbor. The neighbor ended up being okay, but I remember all the neighbors were like petitioning against this, and they were like trying to find out who the owner was through us so they could sue him.
Right.
And I will never forget, this is, again, years ago, I drove to the neighbor, with their permission, I drove to the neighbor's house at like 9:30 at night. And I gathered the neighbors who were all gathering anyway. I let them all know I was going to come talk to the neighbor that got hurt and check on them. But I also wanted the other neighbors to join me. And we sat in the living room for like 30 minutes, and I just let them know I'm a human. This landlord is an accidental landlord. He's not some big investor. He's not like this dog was not, this is an illegal, like, please don't go after the landlord. Let's all be reasonable about this. Like, we're going to do, here's the steps we're going to take to get rid of this pet. Here's the steps we're going to take to get rid of the tenants because they had violated the lease in X amount of ways at this time. And so we just stayed in communication and thankfully avoided a lawsuit. But the neighbor was fine. Like, he was just in and out of the hospital. Well, I don't think he needed stitches, but he was scratched up, right? But it was one of those things where we were like, holy cow, how is this? Like, are we getting sued? Is the owner getting sued? Are the tenants getting sued? And it was a nightmare.
And sometimes if it's small enough, as an owner or a property manager, you say, hey, look, this is a $1,500 bill at the emergency room. We are stroking a check. And is there anything else we can do for you to kind of avoid that tension? And because when you escalate it, And they're gonna pick up that phone, call that lawyer.
I'm pretty sure we did that too. I think we brought them gift card, like we paid for their medical and then brought them gift cards just to show like, hey, we're all trying to look out for each other. Like there was no intention, there was no anything other than that. And I think once they saw like what kind of company we weren't some big corporation and we weren't like just doing something evil, that they were like, we were on the same page and we were supporting each other. Now, we are not attorneys and we're not giving legal advice, but I get the question a lot. Should I buy this rental property in the LLC or in the personal name? Now, obviously, if it's an investment, again, not an attorney, I would typically advise put it in an LLC if you're buying it for the purpose of it being an investment property. I'm interested in knowing, like, if it is a rental property and it's in their personal name versus LLC, what additional coverage, if any, umbrella policies or whatever, should they get on their insurance?
So and I'm not an attorney, like you said, but this is what I know from 26 years of experience. If you're buying one rental property, okay, and it's very easy to put that rental property in an LLC, do it. Because you getting it out of your personal name just protects your assets, okay? So, they can only, from what I understand, sue that LLC. Well, if the LLC only owns that one house, that's the best case scenario for them. Now, let's say you have 3 rentals and you got them in your personal name. Then your assets become available for an attorney, or if it's bad enough, they're not just getting one attorney, they're going to get 3.
Right.
And they're all going to team up and come after you with both barrels blazing, and depending on the situation, so you definitely want to take your assets out of this equation altogether.
Right.
Now, for people who have multiple rental properties and they say, well, I don't want to put each one in an LLC. I'm like, I understand. So think about this. Let's take 5 or let's take 6 and put those in a separate LLC. Right. And, we've got 10 separate LLCs.
It's manageable.
And it's manageable. And then I'm not a CPA either, so I don't know the tax implications of having many LLCs.
They're usually disregarded, like in that form, unless it's some more complicated structure. They're usually disregarded entities and get filed through your, again, not a CPA, but they get filed through your personal taxes essentially. So it's not that much more. Of course, like you need to keep separate books and you might need separate accounts, bank accounts and everything for those LLCs. That's where it's more of a nuisance, where you're like, all right, what card am I using? And you have 20 cards and you're like, oh, this LLC. But these days, so many things are paid online and automated and stuff. You just get it all set up in the right bank accounts, the right LLCs. And then what I do is I typically have 3 properties per LLC and won't exceed that. Right. And if I have a more expensive property, that's going to be in its own bucket, so smart. It doesn't play with anything
Very
else.
Smart. But, and to your other part of your question was the umbrella. So if you have a home, 3 autos and 3 rentals, and you say there's some reasons that people do not want to put them in an LLC, absolutely get an umbrella. Why? Because an umbrella typically for that size portfolio probably runs you about $18 to $19 a month for $1 million.
Right. Yep.
Okay. You can get 2, 3, 4, 5 million, and what's that going to do? It's going to allow you to sleep at night.
Right.
Hey, I am well protected. And when courts and judges see that you've done everything you possibly can do to have that coverage, they're more lenient on the person who is just outright negligent, or, like you said, trying to flip a house and not say it's vacant or whatever the situation is. So they respect that more.
Right. I have one property that's a rental that's still in my personal name. I hate it, but I have not converted it to the LLC because of the due on sale clause, right?
Okay.
And so now many people listening will be like, we do it all the time. It'll never get called out, blah, blah, blah. The interest rate, I don't want to risk it. The interest rate on this house is 2.5%. And so if the lender catches any glimpse and has the opportunity to now force me to refinance or do whatever and get me at a 6% or something like that, I don't want to touch it. So I remember calling you and be like, hey, I'm not converting this, and I need the umbrella policies to cover on this one. Right. And then as soon as the house is paid off, but I'm like, I do not, and maybe again, like there's probably people that will laugh at this, but I don't want to take any chances on that lender being able to get out of that 2.5% interest.
Sure.
So that's my reason. But everything that I buy with the intent, that was a primary that now is a rental, right? I didn't buy it with the intent of being a rental, which is different, right?
Right.
Awesome. So tenant screening. You talk about this, like the importance of tenant screening to reduce your risk. Obviously, we handle tenant screening, and there's a lot of things that we look out for. Is there anything that you know in particular with your experience, 26 years, that specifically correlate with more risk from tenants?
Obviously, the dogs are the biggest thing. You can look, maybe ask them for where they lived before, and then if you send me that information, I can look to see, hey, did they try to put claims? Yeah, did they try to, where were they before? And I can run that claims report and say, hey, look, I can't tell you what's on this claims report, but I can tell you, be wary or whatever the situation may be. And then, again, dogs. And then with the short-term rentals, I'll just give you part of the problem, and maybe some people will know it, and in certain areas of town, they were having drug dealers come in and think about it. I can come in, rent this house for 2 days, run my drug business for 2 days, and then I'm on the move to the next one, and I won't get caught because I'm only going to be there 2 days, and I'm on to the next one, and then you have, well, somebody got shot. Well, who's liable?
Yep.
And when those claims happen, not to discount everybody's getting roped in. Peak Property Management's getting roped in, the owner, the tenant, all this is going to happen. They're going to dissect that policy that I've written, so I've had to go to court and testify. This is what we wrote. This is why we wrote it this way.
That's one of the scariest things for us is like the things that are absolutely out of our control, and we pay an enormous amount of insurance each year to mitigate that as much as possible, but we still can't handle what's out of our. We had I shouldn't go into too much detail, but we had I think for probably the first time ever, we have what's called a professional tenant that knows how to play the game. I'll just say that. I don't want to give too many details, but they know how to play the game, and they are doing everything they can to just milk money out of the landlord and milk money out of the property manager through court systems, through property damage, through all these different things. And it's really interesting how it works. And like we're like learning through it because we've never dealt with this before, and we're like, even at 1,000+ units, you hear about it all the time because people hear about the bad stuff, but the majority of what happens is good, and it's by the lease and stuff, but this is one that definitely stands out, and we're like, there's no way the screening would have told us. But it's actually interesting that you say that. Is like, I might need to look through the legalities and the process of this, but if we were to run previous insurance claims, we might find that we could have caught some pattern before leasing to this person, because there are, I'll say, a lot of insurance claims involved with dealing with this tenant.
Here's one way. So if you called me and said, hey, can you vet this person? Like, I can't just run a report and tell Stephen Glover what this, we have a lot of red tape in Virginia, but here's what you can do. When you say, I need a renter's policy, if they tell you I can't get one, there's a reason for it.
Man, that's a great nugget right there.
Yeah. If you say, I need a renter's policy, if there's been 2 claims in the last 3 years, they ain't getting one.
Interesting.
So if they tell you I can't get a renter's policy, there's a strong reason why they can't get one.
And when you're saying renters, are you saying renters and liability? Like, are you assuming that's, so they might say they can't get a liability or they can't get a...
Well, yeah. I mean, liability is part of that renters.
Got it, okay.
So, but if you just say, I need a renter's policy, so you really personally don't care about the coverage they have on their stuff. Yours is the liability, so that's what you're looking for.
Right.
And I would strongly suggest at least $500,000. Right. It's easy to get, but when that tenant says, oh, we can't get one of those.
Right. Interesting. That's a good nugget to learn, because I haven't thought about it from that perspective. Now, I will say that I do care if they have renters policy, even though it covers their belongings. I care because their refrigerator goes out and all their groceries go bad. That renter's policy will cover their groceries, right?
Absolutely.
And then otherwise, they're looking for a check from the landlord, and we can say, hey, look, you're covered by this.
Yep.
We're going to do whatever we can. We're going to bring a different, fridge by, or we're going to do whatever. But it will help the landlord in some scenarios to have to spend goodwill checks on the tenant, which in some cases are a good thing that maybe legally you're not responsible for doing, but it does get you out of some issues.
You're looking at, hey, we had to write a $500 check for all these steaks they said they had,
right.
But if you made that tenant whole and they're with you for 10 years,
100%. Yep.
You're golden. That is, isn't that, I would say, the investor's perfect dream to have a client for 10 years that pays and you know them and perfect.
It's all about that experience. If you can make it better, and it's a legit claim or issue. And
absolutely.
Let's talk about vendors real quick. So if landlords or property managers hire vendors to go work on site. And so when I say vendors, it's plumbers, HVAC techs, et cetera, handymen, assuming they have a large enough company to need insurance or whatever. Should they require that their vendors add the landlord? I know from property manager, we require it.
Yes.
Should a landlord that owns one house that's hiring HVAC companies, should they require that vendor to add them as additional insured on their policies?
Absolutely. And the reason, number one, a lot of investors know people that will just do stuff, okay? And they don't vet the contractor.
Right.
So they say, okay, well, every investor should do this. You should say, I need a COI from to prove that you have insurance, okay? And you need general liability and workers' comp. You really don't care whether they have commercial auto or not. But the two things you want to think about are, if he's got employees that are going to be on your property, he better have work comp. He needs general liability if he's going to be on your property. Okay, so if that contractor, is on your property and he gets hurt, if he's a roofer and he gets hurt and has no insurance, he's suing you, and you go lose.
Right.
And you say, well, I hired him to do this job. Well, why didn't you check to see if he had his own insurance?
Right.
So that's the first line of protection for investors, is to make sure. And I know investors are like, we just don't have time. Well, you got to take the time, because all it takes is the one,
And once you find your guy or your team, and they have insurance, you just might want to keep that COI on file and then check on the renewal or something like that. When I say add additional insured, I guess that would be the second line of protection, right? Make sure that they have the insurance first,
correct,
and then ask for additional insured. Now, what is the advantage of being additional insured versus additional interest? Because I think a lot of people will push back and be like, oh yeah, you're additional interest now, and people will miss that. It's not additional insured. What is I know some people feel strongly about it, some people don't. What is your take on it?
So you always want to be additionally insured, and because if you're going to be on the property, so Peak Property is going to be on the property, and one of your people get hurt, that's another first line of defense, versus Peak having to come back and say, now we've got a work comp claim, and now that disgruntled employee says, Stephen, talk to my lawyer. I got hurt working for you on this guy's property. So you want to be additionally insured on, any property that you want to be on. Additional interest is worthless, basically.
It's just it gives you notifications if it's canceled.
It cancels. That's all that is they're going to send you something saying, hey, their policy canceled, which would allow you, I shouldn't say worthless, that was a bad word, would allow you to contact them and say, do you have another, did you switch companies? Because we'd like to see another to make sure that you're covering your bases.
So the benefit, additional interest will basically give you notifications the policy terminates or is canceled or something like that. So it can give you a heads up if your go-to HVAC person or plumber or whatever no longer has insurance or change policies, and then you want to be additional interest on that. Or like at Peak Property Management, we make sure that all of our vendors have us as additional insured, which from what I understand means that if one of their workers does get hurt, or they cause issues on the property or anything like that, it goes through our insurance and then kind of bounces to theirs, right?
Right. It was probably going to go through theirs
or
first.
Their primary, right? That's the term for it.
Right. Yeah. So it's kind of like the renters. That's the first line of defense. Then, depending on what it is, there's, they might rope you in anyway, but you just need to do your due diligence to try to set up that first fence, and that's a good way to do it. Absolutely.
You talked about the dead tree, you talked about the dog bite. What's another story or two in the crazy world of insurance that you have run into over the years?
I think I don't know if it's so much as probably crazy. I mean, the UPS driver was pretty significant. The tree, there was a lawsuit, and you can look it up. It just happened probably 2 months ago, and the attorneys won. It's a $2 million lawsuit of a tree that actually fell on someone, and it was on a commercial property. So generally speaking, a commercial property has more coverage, and judges, courts, when it's commercial, they look at it a little different.
You have higher responsibility.
Yeah, exactly. So, the dead tree thing where it actually fell on someone, like, think of the odds of that happening are really slim, but insurance is all about odds. That's what they're looking at. So those are two of the things, and I would say for anybody watching that has young drivers, I had a situation where a gentleman who had minimum liability limits when he came to me, and I won't say the company he was with, didn't matter because I'm here to help him. I was like, look, you need to increase your liability limits, and we need to get an umbrella. And he was like, I'm all for it. Literally 30 days later, his daughter was in an accident. She was making a left on a green light, wasn't the arrow. The gentleman T-bones her. He's a plumber, shatters his arm, knocks out all his teeth, hurts his neck. So he works for himself, so they're going to have to pay his salary for years and years. So that umbrella, the auto gets exhausted, so they pay out the $500,000 for the auto. Then they tapped into the umbrella and got a lot of that umbrella, but his assets were never touched. So I think it's just important. The umbrellas are important. If you have assets, and really anybody, I mean, a single 26-year-old living in an apartment that has a car might not need an umbrella, but if you've got any assets, you really need one. Crazy, I can't really, I mean, there's been some boat accidents. I've had some people have their boats up in the trees, and I'm like,
a little too much.
What happened? What happened? I don't know what happened, So, we get a lot of different things. That one was pretty crazy when you got the Marine police pulling out a boat that you insure. And
so you chose, you could have went to work for State Farm or just name any insurance company out there. But you chose to be an independent agent, right? Is that the correct term?
That's correct.
Yeah. So why is that? Let's talk about like the differences and what does that allow you to do?
So when you're an independent, you have multiple companies. So, it's kind of like I was talking about with the niches of different companies and what some companies want and some companies don't. When you work for a captive company, and I don't think it's going to bother. Everybody knows like a State Farm is a captive company. Great company. State Farm is an amazing company, okay? But they're captive. They have their own agents who are employees that sell policies. They have one avenue, one policy, and that's it. So if that policy gets, hey, it went up $1,000 from last year, and you call State Farm, they're going to say, yeah, this just is what it is. Where, You call me and say, and really, you won't have to call me. I'm going to call you and say, your policy went up $1,000. Your renewal's coming up in 45 days. We see it. We're going to requote this because that company has just lost money in this market and we need to move you. So it allows me the ability to find what you need from multiple different companies, where the State Farm person is, no disrespect, just going to say, good luck.
Right.
Here, it is what it is. We have to charge this.
Yeah. I mean, that makes a lot of sense. They can't go shop other companies and sell you those policies.
Right.
How many companies do you have access to?
22.
Wow.
22 companies.
Yeah, that's cool.
It
and
is.
You've been doing it for 26 years.
26 years.
And you have thousands of clients.
Approximately 4,000 clients.
That's okay.
Yeah.
We can get that number up a little bit.
We could. We could.
Oh man, there's so much good information in this, and I think a lot of people can really benefit from everything you just said, and getting to know you and using you as a resource. Where can people find you?
Our website is www.thehallsofinsurance.com. Phone numbers are on there. Also, one other thing about my agency is I'm a family-owned agency.
Awesome.
So when you're calling, you're either going to talk to my daughter, my son, or myself. So it's just three of us, and we care. That's ultimately, for me personally, this business is now more about my kids. For me, I've brought it to where I want it, and now I have the ability to sit down with somebody who's not going to do business with me and have an hour-long conversation about what's best for them in Ohio or in Florida. I don't know all the laws in other states, and I'll tell you, I don't know all the laws in other states, but if you give me the options, my experience, and I'm strong, I can tell you what's the best thing for you and what you need to do. And it's just being a caring just being a caring human for somebody.
Yep. And I think I know we have a ton of mutual friends, and I think everyone sees that from you. At the beginning of we had mentioned that you only write in Virginia, correct? And then at the beginning of the podcast, I mentioned you do insurance for all kinds of things, but we're going to focus on property today. What are just a quick list of the other things that you also insure? You mentioned boats, you mentioned automobiles. What else?
Commercial buildings.
Okay.
Whether they're medical buildings, and I really quick, I'll get into what's tough in Richmond. So if you have a restaurant and you got habitational above the restaurant in a 1910 building, so downtown,
which is
3rd Street, half of Richmond, again, just expect to pay more premium because of that, and
why is that? Why is it?
If you're buying a building, is it sprinklered? Sprinkler, that is a huge discount when it's sprinklered and it works. We're talking you can cut that policy in half, or if you don't have it, it's going to be double because you don't have it. So some of those things to look at when you're buying commercial properties, boats, cars, umbrellas, I run the gamut. The only thing I don't do is life and health.
Okay.
So I don't write any life and health.
But you have resources for that.
I do have resources for it, very good ones.
Yep.
And I get the call all the time. Who do you do life insurance, or who can you recommend? And absolutely.
Awesome. Who is your ideal client?
Ideal client? I would say just the run-of-the-mill family, because they've had their policy for 20 years with XYZ company, and nobody's talked to them. Nobody's reached out to them. Nobody's looked at their renewal, and they come to me, and they're paying $4,000 a year for that policy. Or, if it's home and auto, they're paying $6,000-7,000. And we call that client and say, yeah, you're paying $8,000 and we've got it for $3,000. That feeling is why I do this job.
Yeah.
So that feeling of, I just made this person's day, Christmas, year, and then in turn, I made a little bit of money.
Right.
And I'm proud of myself, my agency, for having that outlet for that client. So yeah, commercial buildings, whether they're medical, whatever, there's some caveats to older buildings, like I said, but your run-of-the-mill medical buildings are pretty easy to insure, and I do that stuff all day long.
Awesome. Any final thoughts before we wrap up?
No, I think we covered a lot of stuff in a little bit of time, and I'm not the end-all be-all. It's kind of, there's an insurance agent on every corner, and if you like your agent, wonderful. Having a relationship with a good agent that will take the time to talk to you and answer the phone, it's just an invaluable asset, because we cost you nothing. I cost you $0.00. So ask me questions. I'm here to help, any way I can.
Yeah. Chris, it's awesome having you as a friend and a resource over the years, especially as I've built a company, gotten into real estate, and had tons of friends that are in real estate now. It's just great having someone on the team that is very responsive and has the knowledge and the experience that can help us through weird situations and things like that. Yeah. Thank you so much for coming on the podcast and sharing your knowledge.
Yeah, absolutely. Thank you. And for any investors not using Peak, they need to be using Peak. Great people here. And I've known Stephen Glover for a good while, and he's a great friend, very integrity driven, and I love him like a brother.
Thanks, man. I appreciate it. I appreciate you, man.
Thank you.